Hi there, very good morning to all our viewers who's joining us live on this live broadcast on Money Control. You're watching Opening Bell with me, Stacy Pereira, and I'm here to take you through all those news and cues that you need to be watching out for that could go on to impact your trading day. So what do we have in store? Well, we did see the Nifty manage to extend this rally, but can that be pushed into the third day on a row? We'll have to wait and see. Well, 22,336 is where the Nifty closed yesterday. Sensex too gaining close to 560 odd points, and all sectoral indices for that matter ending in the green, led by PSU banking pack. Now, let's not forget it was the index heavyweight RIL which came out with its earnings, and we will be discussing that in quite a detail. But first, let me take you through all the top headlines. Now, stocks risen on Wall Street. The S&P 500 and the Nasdaq both snapped their 6-day losing streak as tensions receded in West Asia. And Asian markets traded mixed despite gains from the US markets, and ahead of this release of PMI data from India as well as Japan, the GIFT Nifty is also suggesting a higher start for the Indian markets. Crude prices, meanwhile, remain range-bound with Brent around $87 a barrel, while gold also drops to its weekly lows of around $2,350 an ounce as tensions recede in West Asia. Reliance Industries delivers a robust fourth quarter number as all business segments clock strong growth. Revenues climbed by 11% and EBITDA has risen by 14% on a year-on-year basis as operational performance beats expectations. And in key numbers to track today, Tata Consumers is expected to deliver improved margins and about 10 to 12% revenue growth in the fourth quarter. Benefits from the Capital Foods acquisition are also likely to kick in. Well, it is going to be quite an interesting day to see where markets are headed, whether that, we go further ahead from that 22,300 odd levels, or there's more resistance that we're going to see, and we are going to get to those numbers in just a jiffy once markets open. But let me also give you a broader picture of what the F&O cues are really suggesting, and there we saw that 23,000 strike, which pretty much owned the maximum call open interest with about 1.07 crore contracts that were put in for this, which pretty much will act as that resistance level, we could say, for the Nifty in the short term. Meaningful call writing was also seen in that 22,600 strike, whereas the maximum call unwinding was seen in the 22,200 strike. On the put side, we did see the maximum open interest that was seen in the 22,000 strike, whereas put unwinding was seen in the 22,700 strike. Now, as for the Nifty put call ratio, the PCR that pretty much indicates the mood of the market, that one managed to jump to about 1.14 from the 1.03 levels it was in the previous session. This meaning that the traders are selling more put options than call options, which generally indicates a more bullish sentiment in the market. But also, let's look at the stocks that are making it in today's F&O band. Well, NSE has gone on to add Hindustan Copper into the F&O band for April 23rd. It will retain Biocon, Vodafone India, Piramal Enterprise, SAIL and Z Entertainment into that ban list, whereas it has removed Balrampur Chini Mills, Bandhan Bank, Exide Industries and Metropolis Healthcare from the said ban list. Now, let me also take you through all the fund flows that were coming in, and yesterday we did see foreign institutional investors being net sellers, selling shares close to 2,915.23 crore rupees, whereas it was the domestic institutional investors that did the buying shares close to 3,542.93 crores worth of stocks on April 22nd. If you also look at the volatility index of the India VIX, this is pretty much a fear gauge, we would say. That one fell by about 5.62% to 12.70 levels. This after rising for 5 sessions in a trot. So that's where we're seeing some bit of, one would say a good sentiment coming back to the market, where that fear seems to be fading away. We are also entering elections. Phase 2 of polls will happen on April 26th. So all of that is going to be something that is pretty much playing out there, and you're seeing the VIX index now kind of relaxing a bit. Also, in terms of earnings that you need to be watching out for today, there is MCX, there's also Tata Consumer Products, Tata Elexi, M&M Financial Services, which has come out and said that they won't be going ahead with that board meeting, and we'll tell you in a bit why. Cyient, DLM, ICICI Prudential Life Services are some of the other earnings that you can be tracking today. Well, let's then get going and discuss some of those stocks and strategies that you could be adopting in today's trade and also for the week ahead. It is an F&O expiry week for the April series. Joining me to discuss all of this is Osho Krishan. He's a senior analyst at technical and derivatives research at Angel One. Good morning, Osho. Good to have you on the show with us. Let's talk first of the strategy one could adopt for the Nifty. Now, we've seen a good, nice rally, 3 days. It would be if it continues today. But what are the kind of levels that we could be tracking, and especially because we're just 2 days from expiry? So how should one be using this strategy then?
Very good morning to you and all the viewers of Money Control. First of all, thank you for having me at your show. Well, now coming to the query on Nifty, that how is it going to perform being the expiry week? So I'm expecting, because we have seen a very strong recoup in the last 2 trading sessions, and this thing can see a certain upside movement in the coming period also. But on the higher end, on the technical front, I am expecting a resilience near the zone of 22,500, because there is a bearish gap around 22,430 to 22,500 odd zone. So this is on the technical levels where one can see some kind of resistance in the near period. Even on the derivative front, there has been strong scattered positions on the call writing front. It's starting from 22,400 towards 22,600. So that is indicating that we have a nearby resistance approximately around the same zone of 22,400 to 600 odd levels. So I'm expecting on the higher end, one should not be very much aggressive. But in between, if we get some chance of any kind of correction or dip in the market towards the zone of, let's say, 22,250 to 300 odd levels, that would be auguring very well for the buyers. So my approach in the market will be to buy the dips, and on the higher levels, it's better to stay light and wait for some kind of correction. And in between, if there will be any kind of correction, that will be utilized for aggressively buying positions in the index.
Right. Well, that's the strategy for Nifty, but what about the Bank Nifty? Now, that one too, we've seen some sharp recovery. Yesterday, it was the PSU banking lot that pretty much, moved, was the gainer, leading the gainers list, one could say. So what really in the banking index are we going to see? Is that 48,000 level somewhere pretty close, and we could see, touching those levels anytime soon?
So in the pre-market, we are expecting an opening of approximately 0.8%. So 48,200, 250 is the spot zone where we are starting Bank Nifty. But on the higher levels, 48,500, which is again a bearish gap on the technical front, should be acting as the resistance. So one should wait for some kind of settlement in the market. Once there will be first half an hour to 1 hour will be very crucial to watch whether it sustains on the higher grounds or it gives an opportunity with a dip on the lower end. If it comes, then on the lower end, 47,800 and 47,700 is the zone which is expected to provide very strong support in the near period, and that should be an opportunity where one should go long in Bank Nifty. On the higher end, 48,500 is the zone where one should try to light their positions, exit their long positions, and on the lower end, one can definitely try to add long positions in Bank Nifty also.
Right, but coming to the components of the Bank Nifty, now yesterday we did see HDFC Bank come under some bit of pressure, and that one has been seeing, after it did come out with a good set of numbers, one would say in-line numbers, but a big provision that they've made of about 10,900 crores. But pretty much the numbers factoring the demerger now coming, all of those hiccups out of the way. How do you see the components of this Bank Nifty? Are we still skewed more towards the PSU banking lot, or there is enough and more opportunities even in the private banks? How would you be judging these, and what would be your picks then?
I see, for now, there will be a strong traction that can be seen throughout the PSU counters, the PSU banks. Specifically, if I have to name them, Canara Bank, SBI, Bank of Baroda, these counters are looking very positive. They are having a very strong momentum, and I am expecting the momentum to continue in the coming period also. Now, coming to the private sector banks, like the name you have mentioned, HDFC Bank, it has already seen a very strong traction from the zone of approximately 1450 towards the zone of 1550 odd levels. So there can be some kind of time-wise correction that can be seen in HDFC Bank, and major of the private sector banks. But overall, I am expecting the trend is still upwards. We need to gauge the momentum in the PSU banks for the time being and wait for strong sustenance in the private banks. Once they start sustaining at the higher levels, then it will give us an opportunity to enter into private sector bank in an aggressive, bullish manner.
Do stay on with us, Osho. We will try and address a couple of the queries, and I'd like to tell our viewers, do send in your queries and we'll have Osho address them. If there are any stocks that you would want to know where you should be trading or what should be the strategy, do write to us or put it on our live stream there and we'll try and have them answered. But let me also address a couple of other stocks that will be in focus. We will get to Reliance in a bit. But another one that put out its numbers was Tejas Network, where the wireline and wireless networking products maker has recorded a consolidated net profit of about 146.8 crore rupees. This for the quarter ending March FY24. This is mostly driven by that healthy top line. Now, when we're talking about this top line, they are seeing some multi-fold jumps there. The net loss, this compared to the net loss that it had reported, about 11.5 crore rupees in the same period last year. Revenues from operation also increased sharply by about 343.3%. So this is that big number that we're talking about, coming in at 1,326.88 crore rupees. So Tejas Networks definitely going to see a good upside perhaps after putting out these numbers. Now, M&M Financial Services, that one was also to put out its numbers today. The board was to meet, but it has gone on to defer this board meeting because they are reporting a fraud that has been detected in the branch in the northeastern part of the country. Now, the financial impact, though, they say through this fraud is unlikely to exceed anywhere more than 150 crore rupees is what the company is come out and saying. But we'll have to wait and see when the board actually goes on to meet and what that impact is going to be. That stock definitely might see some bit of a negative pressure today. But let me go back to Osho quickly just before market starts. Let me get his sense on the financial services. We just spoke about banks, but what about the NBFCs? We are seeing quite a bit of action even in that space. You're seeing Paytm also come out and say they're not really getting too much of hate, even though there are customers moving, merchants moving. The NBFC space has been quite interesting. You're seeing RBI come out with different kind of norms asking these NBFCs to adhere to, especially the fact that the ones that are in the upper layer will have to then go on to list, and we are seeing a lot of action, be it Aditya Birla Capital or the likes. What are you sensing in this space? Is there a reason of caution there, or we are going to see Bajaj Finance come out with its earnings just into this week as well? So what can we expect from the NBFC space, and what are you looking at?
See, overall, NBFC space has given a very strong trajectory in the recent period. If I have to name them, then Manappuram Finance, Muthoot Finance, they have seen a very strong traction in the recent period. Currently, they are hovering into a consolidation zone, which is a very healthy setup on the technical development. So I'm expecting that the time again it witness a strong consolidation breakout. Then from here onwards, we can expect a decent up move in these counters. But coming to big names like Bajaj Finance, Bajaj Finserv, these counters have been into some kind of corrective phase. They have recouped from the lows and now currently hovering around a very crucial resistance zone of 200-day SMA. So we need to have a patiently watch these counters. Then the time it gives a sustainable breakthrough, then from there onwards we can look for opportunity in Bajaj Finance to go long. Overall setup is quite lucrative for the time being, but one needs to have a decisive breakthrough in these counters for a short to medium term time frame.
Right, Osho. In fact, let's just address market open there. We are seeing quite a nice start there for the Nifty. 22,400 levels is what we've managed to at opening bell. 0.3% higher for the Nifty. Sensex also they're gaining close to 250 odd points. We would say 73,800 levels is where we are seeing the sensex at. The broader indices too have seen some good action. Yesterday we saw the mid cap gaining almost 0.8%, the small cap over 1%, and that indices again they're close to half a percentage point of gains coming in for the Nifty mid cap index. We'll also look at the other sectoral indices for that matter, and the Bank Nifty also there seeing that 48,100 levels is what it has crossed, and we were talking about it conquering that 48,000 levels. The PSU banking pack again, with a good momentum there. That was the one leading yesterday, seeing about 0.3% of gain even this morning. IT pack too, seeing close to half a percentage point of gain. So you're seeing the IT index also there in the positive. Pharma also seeing some good action. We would see a couple of other stocks that have been making the news. Zydus Pharma, for that matter, that has been in the news. Nifty FMCG pack as well, seeing some good traction. The consumer basket as well. We have a couple of earnings from the bigger ones. HUL will be reporting its numbers tomorrow. So those Tata consumer products, for that matter, this evening. So we are going to see a lot of action coming in from the FMCG and consumer basket as well. All of those, most of the sectoral indices, for that matter, they're in the positive. The metal index, though, is seeing a pretty much flat trade, and that's the one otherwise that we see quite propped up in trade. So the metal indices are seeing a little bit of flattish trade, whereas the auto index, they're also in the positive. So pretty much all your sectoral indices at least have started at opening well in the positive. Let's take you through all the gainers and losers. Then on your screens, you can see Bharti Airtel adding to the gainers list, HCL Tech as well as Dr. Reddy's Laboratories, all of those in the positive. Wipro, Tech Mahindra as well as NTPC. That's quite interesting to see NTPC on the gainers list this morning. Sun Pharma, HUL as well as IndusInd Bank are your top gainers. Let's look at the flip side. Well, we are having some bit of trouble there in our laggard list, but pretty much Nestle India is what you're seeing there. Power Grid as well as Hindalco among the laggards in trade this morning. But let's discuss all of this with Osho as well. Osho, where do you see, is this where we are looking at the markets headed? 22,400 is where the Nifty at least has opened. Is that a good level to be looking at? And how should one be now adopting that strategy that you were speaking of?
See, again, 22,430 was the starting of the lower band of the bearish gap. So I'm expecting that from here onwards, in the coming half an hour or 1 hour trade, if it sustains around the same levels, then in the coming rest of the period, we can witness a strong 80 to 90 point of up rally in Nifty. But in case if there will be any kind of correction, then one should definitely try to gauge momentum once it reaches the zone of 22,300. That coincides with the 21-day exponential moving average, and we have seen a very decent piling up of put writing positions around 22,300. So I'm expecting it to be a very strong support zone. And my view in market is still buy on the depths. One should not be very much complacent with the start that the way it has started, our market has started, and wait for some kind of settlement for first 15, 20 minutes or half an hour, and then we can definitely look for buying opportunity in our market.
Right, Osho. Let's also take you through Reliance numbers, because that's what is pretty much what we are looking forward to, and how markets are reacting to what the oil telecom to retail conglomerate has really put out. Well, they have recorded a net profit of about 18,951 crore for the March quarter. This making it the first Indian company to cross that 1 lakh crore mark in that pre-tax profit. Of course, this has been a slight dent, we would say, due to the higher tax cost, whereas the revenues have come in at a 2.37 lakh crore rupees, jumping close to 10.8% on a year-on-year basis. This supported by the double-digit growth it is seeing in its oil to chemical or O2C, as well as the consumer businesses. If you look at the EBITDA, that one has risen by 14.3%, coming in at 42,516 crore rupees. The strong contribution pretty much from all the businesses, one would say, and the margin expansion also of close to 50 basis points, coming in at 18% on an annual space, we would say. But Jio's numbers, where the net profit is at 5,337 crore rupees, revenue coming in at 25,959 crore, and the margin there, a good one at 52.4%. So let's talk about telecom for not just Reliance Industries. But what is happening in that space? We just concluded the Vodafone FPO, and we're talking about now perhaps is there a duopoly that we're looking at, or does that FPO really change much for Vodafone? But also the numbers for Reliance, that ARPU number also coming in quite strong at 181.7 rupees. So how is Jio really panning out, and what does it make for Reliance?
So clearly telecom numbers also, both in terms of subscriber additions and ARPU, the numbers have been better than what the market has been expecting. But the bigger trigger, I think what the market is looking for will be the increase in tariffs. So that is right now the talk in the market, that post elections most likely you could see a increase in tariffs. That apart, the subscriber mix that has also for Jio, that has also seen a significant improvement. And as to the point you made about Vodafone, at this point I think the street is still divided whether this quantum of fundraising will really make a difference. But at the same time, if you look at the excitement over the Vodafone FPO and also the stock, the kind of volumes that it's seeing, the general feeling, at least among many of the high net worth individuals, not so much the institutions, is that most likely the government may not be in favor of a duopoly like of kind of situation, and maybe it may want to ensure that Vodafone gets support. At least that is the general view in the market. Whether it plays out or not is another thing, and that is what the price is indicating at this moment.
Right. Let's also take our viewers through a couple of brokerages that have come out with reports on Reliance, where Jefferies is maintaining its buy call but has gone on to hike its price target to 3,380 from the 3,140 that it was earlier. They see that the results are pretty much in line, and the balance sheet also having improved, while the O2C as well as Jio much ahead. They see a little bit miss in the retail aspect of it. They also expect a 14% EBITDA growth in the FY25, with Jio contributing that lion's share on the back of those tariff hikes, just like what Sato was mentioning some time back. There's also Morgan Stanley's report. They too have maintained that overweight call with a target price of 3,046. They see a good fourth quarter and the investment cycle pretty much unwinding. Energy EBITDA too has outstood, they say, whereas retail coming a bit lower. So pretty much all of them pointing out to the fact that the retail business was a little bit of a miss, but pretty much the O2C business offsetting that for them. But overall, Santo, how much does Reliance actually go on to it? We are standing at 22,300, and Reliance pretty much has a big weightage when it comes to that. Do you think Reliance could give that market that push that we need now, heading getting closer back to those 22,700 highs that we've seen? Do you think Reliance can do that, or we have more earnings that will be ahead, and how will that really pan out for the market?
Well, Reliance has had a good run so far. If you see over the last 1 year, the stock has rallied close to about 40%, and this is a big stock. The moves are not very abrupt. There is a strong case for re-rating as such based on the latest quarterly performance. In fact, most of the analyst reports too have been very positive. But given that there's already been a fairly good run up at this point, most likely the gains could be gradual. We might see other stocks also contributing to taking the Nifty higher.
Yeah, so we'll have to wait and see how, but pretty much markets giving that number, giving these earnings, we would say a fairly good shot. It is in the positive, at least in these early hours of trade. Reliance and has been in the run up to its results also. But thank you so much, Santosh, for giving us your time, speaking with us here. Let me get back to Osho and get his sense, because we were asking him about what the charts really are saying about Reliance and whether it is a good time to be entering now, with a couple of brokerages upping their target price as well. Osho, how are you reading Reliance's numbers, and also how should one be looking at it from an investment point of view?
Yeah, see, from the numbers point of view, the counter has already provided a very historical number, which has created a buzz in the market. But overall, if I have to tell you about the stock price movement, then it has been consolidating near the zone of 3,000 levels. But on the technical front, it is having a very strong stature, strong construction has been made on weekly time frame. The time it surpasses the zone of 3,000 on a decisive manner, then from there onwards we can witness a very strong rally of approximately 160 to 200 odd points in a very short term time frame. So 3,000 being a very strong psychological mark and has the highest open interest positions on the call front. So I am expecting the time it breaches 3000 and sustains above there, then we can witness a very decent up move in Reliance. But being a very heavyweight company, I'm not expecting a very strong up move of a larger chart pattern or tech in Reliance, but there will be a gradual up move. Overall, the positioning for Reliance is very positive, hovering above all its exponential moving average. So majority all the technical developments are on a positive side. We just need to wait for a decisive closure above 3000, and from there onwards we can see another set of rally in discount.
Right. So wait for the 3000 levels is what Osho is suggesting. But let's also get, broaden this discussion, and joining me for that now is Siddhartha Khemka, the head of retail research and broking at Motilal Oswal Financial Services. Good morning, Siddhartha, and good to have you with us. This morning we are sitting at a time where we have big earnings coming in, and that pretty much being that swing for the markets. We're also seeing the election pretty much having been factored in now, for that matter, even though we have another 6 other phases of the elections to go by. But on the broader perspective for where really the markets are heading, will it just be a shorter term view? Does it still look like the market is oversold, or are you looking at the overvaluation considering the global risks that are also involved? What really would you be putting India in at this point? How would you be classifying it?
Yeah, good morning, and glad to be on the show. So if you look at the overall market setup, in terms of the macros, India sits pretty strongly with a very strong GDP growth rate. You look at some of the other macro data points, be it the tax collections, GST, the toll collections, the port volumes, they're all suggesting a sharp growth on the macro front. And to complement it, we are seeing a healthy earnings growth season. FY24 overall, the earnings growth is expected to be in excess of 20%. FY25 on a very high base, the growth expectation is about 15-16%. And factoring that 15-16% growth, we are at a 1-year forward P of around 20 times. So for Nifty, I think valuation wise, we are very much comfortable. The GDP growth expectations for the next year, if you look at right from the global firms like IMF, World Bank, from our own RBI, they are expecting 6.5-7% growth, which would be one of the highest in the emerging markets. And to top it all, during the year, we will have the Fed start the interest rate cut cycle, maybe June, maybe later. But whenever that starts, that will be a big positive for equity markets because the cost of funds will go down. Liquidity flows towards emerging markets will go up. Where India is kind of emerging as a shining star, the weightage of Indian equities in the overall emerging pack has almost doubled in the last 5 years. And that would lead to the return of the FI money flows, which should kind of support the Indian market. So overall, we continue to remain very positive on the Indian markets. Yes, broader market, mid caps, the valuations are a bit on the higher side at 25-26 times 1 year forward. So we could see some rotation, sector rotation, stock specific action there. But by far and large, we believe that there could be some near-term volatility because of the global geopolitical factors, the ongoing elections. And as you rightly said, yes, some portion of the outcome of the election is already factored in. So we could see some consolidation once the results are there. But after that, we could again see the return of momentum in the market.
Right. So Siddharth, do stay on because let me try and get a couple of queries answered, and there are quite a few coming in there for Reliance, which we've addressed quite, with already giving you the levels that you could be tracking. But let me, ask about Tata Consumers, because that one is also going to be coming out with its numbers, and the consumer pack as a whole has been quite interesting because we are looking at better volume growth this time around. Whether the rural recovery has actually come into play for these companies is what we'll have to wait and see. So there are a couple of queries asking about Tata Consumers and what should the strategy be today. Of course, there is the acquisitions that they did through this, which will perhaps, kick in the Capital Foods acquisition of that of Smith and Jones, as well as Ching's Secret, all of that will really play out. So let me get him back and get the technical perspective of what one should be looking at in terms of Tata Consumers from a 3 to 5 year perspective. What can we expect to see? Osho, what would be your view on how are the charts really playing out for Tata Consumers?
See, for Tata Consumer, overall, if I have to tell you, the cycle is pretty positive. It is having a cycle of higher highs, higher lows. But for a shorter duration, in the last 2 trading sessions, it has witnessed a very strong movement from the zone of approximately 1100 towards the zone of 1170, 1180. But yes, there can be some kind of volatility as the result is yet to be announced. So I am expecting there can be some kind of volatility that can be seen for the coming 1 to 2 trading sessions. But overall, structure-wise, it is at a very positive radar, and one should definitely try to gauge. If the perspective is from a longer duration, then certainly from here onwards, I can expect a very decent up move in this counter. For short-term duration, 1100 is the support zone, and on the higher end, approximately 1180 to 1200 is the zone which can provide some kind of resilience. The time it surpasses the zone of 1200 on a decisive manner, then we can see the next leg of rally in Tata Consumer for shorter term duration time frame.
Right. So Tata Consumers, in fact, yesterday was among your top gainers, but today, just ahead of its earnings, coming under some bit of pressure. And you're seeing that counter there take, a certain 0.3% lower there in trade. But let me go back to Siddharthan and get his perspective. The overall FMCG pack, are you thinking it is out of the woods now? Are we seeing all of those factors come into play? Inflation pretty much easing to those levels, whether it will be the consumer staples versus the discretionary. What is your take when it comes to the overall FMCG pack?
Yeah, if you look at the overall consumption space, as you rightly said, there have been concerns on the side of rural demand, which has kind of remained weak for the last couple of years. This year, the monsoon is expected to be good, and that should bring some focus back on the consumption side. Overall, as we see the demand trends that remain steady in the last quarter, companies have been focusing to boost their core portfolios, including distribution, new product launches, and so on and so forth. Looking at our overall FMCG universe, we are expecting the entire FMCG pack to post low to mid single digit volume growth in Q4. Some of the sectors, like for example, cigarettes for ITC is seeing a moderation in demand, and we expect a flat volume growth. Overall, again, commodity prices have been stable, and that is kind of helping some of the discretionary categories. So we are expecting a steady earning season from the staples pack. And we would expect that the current valuations, given that they have underperformed, does provide some comfort. And with the likely improvement in demand over the next 12 to 18 months, there could be a case where a lot of fund managers would like to increase the weightage on the consumption space, and that would bring some momentum in some of the better known names. For example, our preferred pick has been Tata Consumer, which is largely, you can say, an urban-driven company. We have the largest segment is tea, which continues to do well. Some of the newer segments, Nourishco, that is kind of putting a lot of growth in the space. And margins are, we are expecting margins to see some improvement to about 15.4% in Q4. Versus 14.1% in the previous same quarter previous year. So overall, I think consumption is a steady quarter and is a steady sector, and some of the selected names could do well from here on.
In fact, I'll stay with this space because I'm getting a query from Yagnesh Balakrishnan, and he's asking whether he can be making a fresh entry for Britannia. As now the stock has fallen from that 5,300 levels and to near to 4,700. So what would be a good level to enter Britannia at this point? Osho, how would you want to answer his query?
Overall, Britannia is into a corrective phase. It is hovering in the lower lows pattern for the timing. So one should either wait for some kind of a strong resurgence in this counter, which could be on a technical front. It is having a very strong resistance around the zone of 4850 to 4900. So the time it reaches these levels, then from there onwards we can look for a gradual accumulation in this counter in a staggered manner. Or on the downside, it is having a very strong support zone near the levels of 4550 to 4600. So if it comes towards either of the zone, one should try to have a buying opportunity in Britannia for short-term duration.
Right, so have that opportunity there at the levels that Osho was just mentioning at a short-term level at least. Let me quickly put in one more query from Alex. He wants your view on Blue Dart and what would be the buying zone for Blue Dart.
See, Blue Dart is hovering into a very corrective phase. It has not recovered from the correction as of now. But in the recent period, the traction which it has gained from the zone of 5900 towards 6400 odd levels, there can be, it has seen some kind of volume with it. So from here onwards, if it sustains above the zone of 6400, so this will give a confirmation of inverted head and shoulder pattern on the daily time frame. So on the immediate time frame, one can expect a strong resurgence near about 6900 to 7000 zone on the higher front. But one should wait for a decisive breakthrough and sustainable move above 6400. Then one can definitely try to accumulate this counter, but keeping a strict stop loss of 6100.
Right. Well, Siddharth, thanks for waiting by so patiently. But if I have to ask you, with the rally we've seen in the past 1 year, we've seen certain themes that have really emerged at the top, be it mostly led by these government-led infrastructure or capital goods or even PSU banks for that matter, all of them really pushing the indices, pushing the markets quite high. Do you think these themes will continue to be in focus even post the elections? And do you see markets really rise because of this going ahead? Or you think they've done, most of them have got, the valuations have gotten stretched at this point and you would want to stay away? Or do you think, our PSU lot still has money to make?
Yeah, I think a very pertinent question here. If you look at the core theme for the current NDA government has been the infrastructure, or you can say the capex side, and that has kind of pushed the capex cycle for the entire you can say economy. And the order book has been pretty strong. Some of these companies have started delivering on the execution side as well. So if you look at most of these public sector enterprises, they are from the core industries, and these are sectors like capital goods, infra, railway, defense, and you have power. So I think this is a pet theme for the NDA government, and if they were to come back, I think the momentum could continue. We would see some of the defense companies sitting on record order books, and that would only continue to grow with the government focusing on making in India, indigenization, and also looking at a lot of export opportunities. With that, I think with the economic growth, power is another space where we see a lot of demand growth, which would continue post-election, and we believe some of these power sector stocks from the public sector enterprise, the likes of NTPC, Power Grid, Coal India, to do well. Another space from the public sector enterprise is the oil and gas space, and if you look at the upstream oil companies, ONGC and Oil India, they are ramping up production volume. So we believe that they are entering into a up cycle after a very long time. Mainly driven by the volume growth and also supported by a stable oil prices globally. So another space from the public or you can say PSU space that we are positive on is the oil and gas space, and especially the upstream oil companies, ONGC and Oil India.
Right. So you're pointing out at power being one of the sectors that you would like to see, oil and gas another one, but and defense of course is what you mentioned first. But if I have to really pick your bait a little more and ask you, not a stock specifics, but this was pretty much targeted to just the PSU stocks. But otherwise, what are the themes that you see really playing out? Which are the sectors that you will be betting on for the current financial year?
Yeah. I think if you look at overall, as we stay positive on the market, there are a lot of sectors which would continue to do well. Some of the niche sectors, for example, real estate is another sector where we are very positive on. companies are reporting record pre-sales data. Demand has been pretty strong despite interest rates being at a higher level, and with the expectation of the start of the interest rate cut cycle somewhere in the middle of this year, I think real estate as a pack could continue to do well. Another space that has been doing really well, and we are very positive on in terms of both earnings as well as market expectation, is auto sector. Overall, we are seeing sharp improvement in demand, and also especially if you look at the two-wheeler space, with the expectation of a good monsoon, expectation of recovery in the rural side, that is another space that can outperform in the current financial year.
So autos is something that we can also be looking out for. Well, let me have Osho Krishan then have the last word. Osho, what are your top stock recommendations for our viewers today?
See, basically, there are diversified stock picks, but from the different sectors. Firstly, Ashok Leyland is looking very positive. It has seen a very strong resurgence from the 200-day SMA on the daily time frame. So I am expecting the up move for in this counter is still pending, and I am expecting an immediate upside target of nearly 178 for the time being. So one should try to gauge the momentum in Ashok Leyland, keeping a strict stop loss of 168. The other counter which has seen a very strong movement in the previous session was United Spirits. McDowell is another name. So United Spirits have seen a very strong traction in terms of volume and prices. So I'm expecting this momentum should continue in the coming period. So 1150, 1160 is the zone where one should try to accumulate this counter. 1120 is the advisable stop loss. And on the higher end, I am expecting a target of nearly 1200. And the third counter, which is looking absolutely positive on technical frame, it is hovering in the cycle of higher highs, is Ambuja Cement. Ambuja Cement is currently hovering above, I guess, 620 now. But one should definitely gauge the momentum, because still I am expecting a target of nearly 640 on the higher end. So Ambuja Cement is the third stock pick that one can look for in a buying opportunity for short-term duration, and keeping a strict stop loss of 600.
Right, so those are the three picks by Osho Krishan. Ashok Leyland, McDowell's or United Spirits, as well as Ambuja Cement is what he's picking for our viewers today. Well, with that, we are completely out of time. So let me thank both my guests, Osho Krishan from Angel One, as well as Siddhartha Khemka from Motilal Oswal Financial Services. Thank you, gentlemen, for joining us this morning and speaking with us, helping our viewers with their queries, as well as giving them some perspective into what sectors and will be performing and what they could be looking at as investment strategies. Well, with that, it's a wrap and goodbye from the entire team that puts this piece together. Thank you so much for watching, but do please post in your feedback for us in the comment section below. Also follow us in the link at the bottom of your screen, and more importantly, do keep writing to us on our live stream, where we can try and answer the queries that you have with our experts that come on the show. Well, for rest of your updates, do stay tuned to moneycontrol.com as well as the Money Control app.